Hello and welcome everyone to today's session. My name is Muhammad Shanti and I will be your host in this session, the US Market Open. In today's session, we will be speaking about what happened in this market and what's going on with the markets during the US session in particular. And there is a lot of volatility, a lot of movement in today's session. So let's get started. Just before starting, we need to remind you that this webinar or this presentation that we are going to do, or this live, is basically for educational purposes, and it's not for an investment recommendation or anything like that. Basically, we provide educational information for you traders in order to make your own trades. It's required from you to do your own analysis and your own research before making any investment decision. It's very desirable. If you need any assistance in any part of trading, please contact us through our channels. And let's get started. Just before going into the technical analysis part and before going to the charts, basically, we need to tell you exactly what happened in the markets today. So the markets were a little bit volatile ahead of the US Open, with the European currencies switching to the recovery mode after a period of heavy selling. And the US dollar index lost some steam as some rosy data releases shifted funds to riskier assets and hopes for China's easing lockdowns measures flourished. So sterling is higher across the board as the US employment rate fell to 3.7, the lowest since 1974. While also we have the average earnings came in 7%, easily beating the 5.4 forecast. This kind of update or this kind of data, bullish data, can boost the British economy. This is one of the reasons why the pound went higher. So, the upbeat employment and wage data from the UK kind of triggered the largest daily increase in the British pounds in almost months. Okay. Which is strikingly, the number of people applying for the unemployment benefits continued to decline at a faster pace since April also. So this suggests that the UK economy can afford additional rate increases in the foreseeable future. So expectations for higher interest rates kind of pushed the pound higher. Nevertheless, UK traders, especially the pound traders, should not push all their trades heavily on pound just yet, because it's too early to become confident in the pound, because the growth risks from Ukraine and the sanctions against Russia and the also post-Brexit trade issues with the EU are gradually resurfacing. So these kind of tensions might actually affect how the pound could go in the coming months. So also we have the regional elections in Northern Ireland, kind of increases the pressure on Boris Johnson, which makes it a little bit hard for him to there could be a new negotiation solution to the so-called Northern Ireland Protocol. So all of these tensions on all these issues are actually could limit the rise of the pound. Nonetheless, the pound actually rose above the 1.24 mark, which is really good. So this kind of information actually kind of pushed the pound higher, and especially a lot of traders try to find the dip to enter the market. So we've seen a lot of selling pressure happening on the pound, and the pound went all the way down in the past 3 weeks, and now there is some reversal happening on the pound, and a lot of traders use this kind of phenomena whenever they see a really huge dip happening, and once it happens and they saw some small reversal, that means there could be a continuation to the upside, and now we're playing the reversal game. So just before going into a buy position here, we need to analyze it from a technical perspective. Like, we need to figure out what kind of numbers that the bullish traders could actually face in the coming future, so like an important resistance level and so on. And we will analyze the pound later. Just give me a second to give you all the updates from other nations. So also in the first quarter of 2022, the Eurozone economy expanded by 0.3 ahead of the 0.2 forecast. We have the classic note of the European Central Bank said that a 50 basis point hike in July is possible if inflation persists. The euro is broadly higher. So now the fact that the main reason why the US dollar is getting higher and higher and getting stronger against all other currencies, all other major currencies, is because of the Fed policy in general. So the Fed policy is that they want to push interest rates higher and higher in the coming future, and they are expecting at the end of this year to be as high as 2%. So this kind of monetary policy, this kind of tight monetary policy boosted the US dollar demand. Now, if the other nations are not actually following up with the US, this actually could hurt the pairs against the US dollar. But what happened is that since Class Knot, which is the European central banker, said that 50 basis point could be possible in July, this kind of gave some boost to the euro bulls. So that's why we've seen the euro a little bit higher in today's session, especially if you look at the DAX index, and also if you look at the Euro Stocks index. So these European indices are in general are higher. So there is some kind of risk on sentiment. Traders are going for more riskier assets than usual. Usually, they whenever there are some fears, they tend to go to safe haven assets such as the dollar, the gold, and so on. But still, we are seeing today some kind of reversals, and we will analyze them technically. Speaking of stocks market, we've seen that just before talking about the stocks market. So if you look at the ECB Hawk opens, so this note from the ECB opens the case for a sharper rate increase, right? So if you look at the euro pound in general, it kind of staged a flash drop to a 2-week lows, or currently at the 0.8392. However, when the ECB member decided to push put some kind of brakes on their current policies, and they won't push higher now, okay, this kind of drop, we saw it stop. So and we saw back again, we saw the pair always getting back higher again. So you would see that the euro pound kind of in a volatile session. So this kind of proves that there is a huge demand on these two currencies. It's not just because the dollar today lost some steam, but rather we can say that the dollar went higher and higher. The euro went higher and the pound went higher. That means that it's suggesting that both currencies are getting stronger. So that could be a bullish signal from a fundamental point of view. Okay. Now, earlier we saw the second GDP growth estimate arrived slightly better than expected in the euro area, and especially for the first quarter. So we saw the euro dollar cheered on the headlines, along with the European bond yields extending its 3-day rally to almost to 1.05, above the 1.05 and near the 1.0554. Okay, while the euro yen picked up some steam to the 136.42. So this bullish action is still under some let's say some questioning, but still, all right, there is some bullish momentum on the euro dollar, on the euro yen, and also on the pound dollar. Okay, now if you look at the US from fundamental point of view, you will see that the monthly traders will be waiting for the monthly retail sales for April. Actually, it came above expectations by 0.9%, while the core, which is almost equivalent, came also stronger than expected at the 0.6, which helped the dollar yen in general. So even though we saw some drops in the dollars today, but still the dollar is strong. The dollar is favored by a lot of traders, but that doesn't mean we cannot take trades on the euro, on the pound. All of these information, all these fundamentals helps us as traders to find different trading opportunities in general. So we need to find the best trading opportunity, and from the technical analysis, we will try to locate the best trading opportunity between these currencies. Now, going to the stocks market in Europe and the US are showing some strong gains and amid bullish sentiment. This is expected because, you know, positive economic updates from the UK and the Eurozone are helping the mood, as mentioned. but still, the fact that we are at the sanctions between Russia and the rest of Europe, the situation between them and Ukraine, the Chinese lockdowns, also the latest Brexit talks, still is in the mood also. So that's why we need to be aware of that. However, in general, we saw some reversal in these stocks, and we will we'll talk about them technically now. Now, later today, we will be expecting the Federal Reserve Chairman Jerome Powell to deliver a speech later. The US dollar is suffering greatly on account of the rally in sterling and the euro. Excuse me. So let's go for the technicals. This is the MT4. Currently, we're looking at the pound dollar at the 4-hour chart. So we saw the movement today, and we saw this bullish candle over here. We are seeing that the pound is currently standing at the 1 spot 24.63 above moving averages. Also, the MACD is pointing to the upside. The RSI is also near the overbought territory. All of these indication tells us that maybe this downtrend has finished. So what do we need to look for? So let's start with this important level over here. So this important level over here was defeated. This gives us a confirmation. This is the levels of 1 spot 24.00, which is a really crucial level. As you can see, we saw before this price got nearly touched before, and it bounced back. Also here, you could see prices also touched it before and bounced back again 3 times. So this level is very crucial. Now, this level gives us a confirmation that the price could continue to the upside, especially it's trading above moving averages. What is my main level that I need to watch for? So let's put some numbers over here. So we have this 1 spot 26.34. That's the main level for bullish traders. If this level is reached by the pound in the coming 4 or 6 4-hour chart candles, we could see a continuation to the upside. However, as I mentioned, because of the fundamental, or because some, let's say, some mood or some thoughts are in Brexit and in the the Russian and Europe sanctions and so on, some traders are still afraid to place a really huge bets on the pound. So let's look at it from a smaller time frame so we can tell exactly what to aim for. So now prices defeated this double top over here, and now we are expecting prices to continue. So my main level to watch is the 1 spot 26.34 in the coming future. However, if prices went all the way down below the levels of 1 spot 23.90 first, we could see a bound ranging market. So between the 1 spot 24.60 and the 1 spot 24 or 23.90. A defeat of this level could indicate that the RSI could go lower, which indicates a selling point, and also could indicate that prices might target the second moving average at 1 spot 23.33. So these are the main levels that traders must look at. So first of all, the 1 spot 23.90 or 24 spot. From the top side, defeating defeating this level is very crucial. So we have the 1 spot 24.95, which is the 1 spot 25. Defeating this level could clear the path for more towards the 1 spot 26, especially the indicators over here are confirming the bullish bias. So if I want to take a trade to the upside, I would enter from this area, put my stop loss around this area, and aim for the 1 spot 26.34. Let's look at it from a risk management point of view. So if you put over here, if you take a trade from this area and aim to the upside, almost here, that's my profit levels. If I want to take, let's say, my losses, I want to see my losses, it's basically from this area till here. All right, so that's almost 1 to 2 ratio, which is a really good setup for a lot of traders. So the ratio over here is very, very quite nice. So bullish setup could be happening in the near future. So have a look, traders, for this setup. Let's go to the euro dollar now. So similar story, the euro dollar, we can see this trend line over here, right? You can see this trend line. You can actually check the trend line in a better way. Just click on the line chart. So when you click on the line chart, you can actually point them all together. So from here till here. Now, if the line chart, or let's say the trending line from the line chart and the trending line from also the, let's say, from the candlesticks, both of them got defeated, that gives us an indication that the downtrend has finished, and now we are in a bullish setup also. What's my main levels to watch for? First of all, this line over here, this area over here. So this area over here, which is from, let's put some, this area over here. So here, this area is very crucial for traders. So that's why the levels of one spot 0590 is very crucial, all right? But still, we could see prices range between these two levels, between this level and the other one is this one, all right? So here and here. So we could see prices range. So you could take a trade buy from this area and aim here, or you can take a sell from this area and aim here. However, if prices went below this trend line over here, if we saw the prices went below, we could see prices aim first for the moving average, the one spot 0480, and then next what to where? To this area, which is the one spot or 0453. A defeat of this levels, a defeat of these two levels, confirm a continuation to the downside. Now let's have a look. Yes, if you look at it from the 4-hour chart, if prices went up and then went down below these two levels, we might see a continuation to the downside. So we could see something like this. So prices go down, up, and then down again. All right, something like that. So down, up, and then down. So be aware of this phenomena unless this support level holds. If this support level holds, we could see a range trading. If this range trading got defeated to the upside, the main level to watch for the long-term view, which is the one spot 0640. That's two major levels that and we need to watch. Okay, so the next level, the next item that we need to look at is gold. I know a lot of you traders love gold trading. So gold is literally in a downtrend trading in the 4-hour chart. You can tell that by either the normal trend line, or you can use also the regression line analysis, or also you can tell that there is a channel to the downside. Excuse me. Excuse me, I'm coughing a little bit. Anyways, let's go back again. So if, let's say, the prices, currently prices are standing at the 1820, reached this area, which is the 1834, touched this trend line perfectly, and now we could expect prices to continue to the downside. Why prices are going to the downside, even though lately the US dollar went down? Still, even though the dollar lost some steam, it lost some steam to other currencies, not for commodities. In particular, gold. Gold is a safe haven item, especially used to hedge against inflation. Now, since interest rates are being pushed higher and higher from all major central banks around the world, this hurts the gold in general, especially if you look at it from our really long-term view. This is the daily chart. So this area over here, these dates are when they decided, the Federal Reserve decided to push interest rates higher. The moment they said that, the downtrend started. And this is what we're trying to show to all our clients. Even though we saw some bullish candles, sometimes some bullish daily candles, that doesn't mean that it's going to the upside similar to this uptrend. So if you look at it from 1 hour point of view, look, we see a lot of crosses happening, and we never saw an overbought territory from gold. So that indicates that prices could continue its downside now. Like what happening is now is that this is a wave happening, and the main levels to watch are these levels. One, the 1838. The second one that we need to look for is this first of all, we need to look at the regression level, which is the 1812. That's the very short-term view. And then next, the 1787. So prices we could see prices continue to the downside now here, go higher a little bit here, and then next to the 70. So we could see a wave like this. So a wave here, and then a wave here, and then a wave to the downside. Let's draw it. So first of all, we could see something like this, and then we see something like this happening, and then next something like this. So this is the expectation for gold. Now, if prices were able to defeat the 1838 or the next, the 1842, this current view changes. Now, how do we enter this market? How do we enter a trending market to the downside, even though we're seeing some ups and downs? Always trust your indicators. So what do I mean, trust your indicators? Now, we saw a crossover to the downside. Now, this candle confirms that the uptrend, the short-term uptrend finished. Now it is an entry point for the downside. We are waiting for the MACD to go below the negative territory, which is near this area. And there we could take a trade from here and aim to this area, which is the 80 mark. So the 80 mark, get out from here, take your take profit, and then wait for a rebounding to happen. Try to let's say, aim for $10 to the upside, but I wouldn't recommend it because this is against the trend. If we saw prices defeat the 80 mark again, that's your long-term game for gold. So you can take a trade from this area, aim to the 80 mark, wait for a small retracement to the upside, and then aim to the downside. That's a different view. You can look at it for gold especially. All right, let's talk about commodities. Now, commodities in general, the commodities in general are literally trading higher and higher. So let's look at the 4-hour chart. So if you look at the regression line analysis over here, you can tell that prices are literally trading within an upside, but there are some waves to the downside happening, some kind of small waves, but still it's ranging, but more bias to the upside. That means every time you see a dip on oil prices, that could indicate that's your entry mark. But we need to wait for confirmation like these confirmations from the MACD, for instance. A MACD triggered was here, and also was triggered from here, and also triggered from here. So every time there was a crossover to the upside, every time that's an entry point. So if you entered here, you would have gained almost $5. If you entered here, you would have almost won also $5. And if you entered here, you would have won almost $10 now. So what do you expect from oil? You could see prices reach this area, which is, let's put it this way. So 114.84, you could see then prices go down a little bit to this area. And then next, you could see another wave to the upside this way. So you can wait for this pullback to happen and wait for a more confirmation. Like, what do I mean more confirmation? Now, there is this level over here. So this level over here, which is the 106.80, this is a pivotal area. So it's very close to the regression middle line, and it's also near the moving averages. And it's also near the highs of multiples. Like we are seeing here some movement over here, or trace let's say a touch over here, and also another movement over here. So this is very pivotal. Now we could see prices reach this area and test this level 106.82. Yeah, all right. If prices reach this area, all right, let's say, okay, if prices reach the 107 or near 106.80, you could wait for confirmation that prices do a small wick to the downside and then a next candle going bullish. That's my entry point for a bullish trade. However, if prices didn't stop near here and continued to the downside, I would aim next to where I would aim for this level, which is the recent lows, which is the 97. So why am I still bullish in general on oil? First of all, the latest lockdown on China are acing. So the main reason why oil went all the way down from here because there is the Russian war. Also, we're seeing the latest lockdowns from China, something affecting the supply side and something affecting the demand side. So what's happening is that the demand side could come back even stronger and stronger. The sanctions could be real. That means the supply side could go down. That means the demand side overpowering the supply side. That means prices could go higher and higher in the future. Okay, that's from the US oil. So lastly, let's go to the stocks, the Dow Jones. Let's look at the Dow Jones. Now, a lot of traders love this Dow Jones. They love trading these indices because it's volatile, it moves really fast, and it could be very good for our trading. So if you look at it from a 4-hour point of view, you could tell that there is a downtrend happening on the Dow Jones. However, every time the indices that moves above moving averages in a very, very short time and really fast way, that could be an indication for bullish traders to enter, because this could be the depth that traders want in order for them to enter this market. However, I wouldn't make this bet really fast. Why? Because if I'm going to play the long game, I would rather wait for certain levels to be defeated. So if you look here, over here, this area is very crucial. It's very similar to this area, but from the downside. All right, the same way there is a support, there is a resistance over here. So if you look at it this way, similar story. We need prices to defeat this level, this pivotal level, in order to see a more upside. What's next for bullish traders? The 34,000 mark. All right, so here, that's a crucial area to be defeated from the top side. If I saw the 4-hour candles get past this level, that means the upside could continue. Otherwise, we could see a continuation in this regression line. So we could see prices continue to the downside like this, and then retrace back higher, and then going back here. This is how I see it for the Dow Jones, especially because the main reason why I'm doing this is that, first of all, inflation numbers, even though it dropped a little bit, but still it's very high. Now, whenever interest rates are being pushed higher, that means it's really bad for stocks, especially when inflation numbers are super strong. Because whenever there is higher inflation numbers, that means higher probability that the central banks push interest rates even further higher. So to the levels even to 50 basis points or even 75 basis points. Now, higher interest rates, that could put some pricing in on the indices to be smashed to the downside, especially if there is a lot of demand on bonds in general, because it's much safer for investors, because they can get more let's say safer returns compared to the stocks. All right, so this is how I see the indicators in general. Anyways, thank you so much for your time. Thank you so much for visiting our channel and seeing this video. Please stay tuned for more videos in the coming future. If you need any question or any information, please contact us through our social media channel and through our local numbers. Thank you so much for your time, and have a nice day.